Hello everyone, and thank you for taking the time to watch this video. It's Tuesday, March 11th, 2025. We will go over the important economic announcements for this week. We have major announcements from the US and from Canada, so let's get right into it. This week, markets are looking forward to the Consumer Price Index. We have the US CPI scheduled for Wednesday, March 12th, 2025. The CPI year over year is forecasted at 2.9% according to the economic calendar consensus. And we also have the core CPI expected at 3.2%. Compared to 3.3% for the year-over-year data. On Thursday, markets are looking for the Producer Price Index, US PPI. We have the core PPI expected to remain unchanged at 0.3%, while the Producer Price Index month over month is expected to decline to 0.3 compared to 0.4 for the prior month. The US CPI has been in a downtrend since 2022, and the most recent data since March 2024, where we were at 3.8%, we are currently at 3.3% level or 3% level. And this is for all items less food and energy, so this is for core CPI. When we look at a breakdown for the components of CPI, we see that shelter component continued its decline, while food component shows a slight uptick up to 2.5%. Now, shifting gears to Canada, we've had a significant political development. Mark Carney, former head of Bank of Canada and the Bank of England, is now Prime Minister. His extensive experience could be vital in addressing the current economic challenges, especially the tariff risks that Canada is facing at the moment. This week, we have Bank of Canada interest rate announcement scheduled for Wednesday, March 12th, and the Bank of Canada monetary policy statement. Canada's inflation has been steady for the past several months, and has also enjoyed decent economic growth in the second half of 2024. All are reasons for interest rates to be kept on hold. However, last month's weak labor force numbers from Canada, on top of the fears of any negative impact from tariffs, have pushed traders to begin considering additional rate cuts by Bank of Canada. For this Wednesday meeting, 99.6% according to the Bloomberg analyst surveys expect interest rates to be cut by 25 basis points. Now we move over to technical analysis. We're looking at Euro USD daily chart. Following the breakout of the descending channel, price action has rallied significantly, taking the price all the way up from 0.370 zone all the way up to almost 1.0945. The significant move to the upside took the price above its short and intermediate moving averages, and currently approaching resistance level 1.1012, a psychological level for a round number. And we have a confluence of resistance represented by the intersection of the upper resistance line, the horizontal channel resistance line, and R5 at 1.1173. We have RSI at overbought levels. Moving over to USD JPY, this is the daily chart, and we have price action has been trading within a descending channel since mid-January 2025. We have a positive divergence between price action and the RSI indicator. We have RSI making higher lows while price action is making lower lows. At the moment, price action is attempting to find support at this confluence S1, confluence of support S1. This is the monthly support, and there is a confluence of resistance just above the price action at the weekly pivot point and intersection with two fast moving averages. RSI is at oversold levels and is pointing upwards. Once again, thank you for taking the time to watch this video. Reminding everyone that we have a Trade the News webinar live tomorrow morning with the US CPI economic release. The webinar starts at 8 a.m. Eastern Standard Time.